ladies and gentlemen, Tesla stock did not have a great day today. We talked about this over the weekend. As soon as that news about the delayed Model 2 or Model Y cheaper variant, we really have no idea. Ever since that came out, we knew Monday was going to be a bad day. We knew today was going to be a bad day. It was a bad day. We're not surprised. What I'm going to say here in this video is important, okay? Well, there's a lot of different things going on. There's tons of variables here on trade, on tariffs, the economy, Trump, Powell, firing Powell. Like, it doesn't end, okay? Specifically with Tesla, as long as there's no bad news over the next 24, 48 hours, which seems also almost impossible to not get bad news within that period, Tesla stock should go higher after earnings. Now, especially following the selling that you've seen today with Tesla stock down about 7%, okay? You're at the lower end range of where Tesla has been throughout this trade war. You've priced in a lot of bad news, and even at this point, you're now pricing in the Model 2's delayed a couple of months. How much worse is it really going to get? Like, we have to get some bad news coming tomorrow in after hours when Tesla reports earnings to get substantial downside from here. Now, tomorrow could also be a red day. You normally get some fear before Tesla's earnings. Like, that's common where people kind of freak out a little bit. So I wouldn't be surprised if there's some downside tomorrow also. Although today markets were down a bit. Wouldn't surprise me if you could recover a little bit tomorrow. We'll see. Again, there's so many different variables. This is not an easy thing to kind of game out here. But in this video, I will share with you the expectations for Tesla's earnings as far as EPS and earnings, what really matters, the questions that are going to be asked on Tesla's conference call, and why I'm actually optimistic about tomorrow and the earnings and the conference call for Tesla stock. So we have a lot to get into in a very short amount of time. Hit that like button, subscribe to the channel. Let me know what you guys think about this down below in the comment section. Let me know if you are bullish or bearish on Tesla's earnings tomorrow down below in that said comment section. So first things first, we expected, again, today was going to be a bad day. It's a bad day, okay? That doesn't, again, take away from the fact of I'm bullish for Tesla's earnings, okay? I was never bullish on Monday, bullish on Tesla's earnings. I specifically said in the last video, if Tesla sells off into earnings, that's even better because then you're pricing in more bad news and less good news, okay? And I think you could see a pretty violent rally tomorrow if we do get good news from Tesla. Now, it's not going to be in the form of earnings like EPS or revenue. It's going to be in the form of like guidance, like future projections. Now, just to give you a quick rundown of the overall estimates from Wall Street, before we get into some of the more specific estimates, like Wells Fargo's estimate for Tesla earnings tomorrow, here it is. Consensus EPS of 45 cents a share, consensus revenue of 21.85 billion, year-over-year change, none in EPS, and a 2.6% increase in revenue. Now, Tesla missed their earnings per share last quarter and missed their revenue targets. Over the last year, 4 quarters, Tesla has missed estimates 75% of the time. They've missed estimates the last 3 quarters, okay? Don't be surprised when Tesla misses estimates. Now, I will say the bar is low. I mean, you're expecting like a 40-ish% decline in profitability on a quarter-over-quarter basis. I would say those estimates are pretty low. Now, other firms like Wells Fargo coming out today, even undercutting the consensus estimates, like that's also setting the bar even lower. But it does not matter what happened last quarter. It's about demand. It's about tariffs. It's about robotaxi. It's about the general guidance for the rest of this year and next year. That's what investors care about. And that's where if we do see a positive move higher in Tesla following earnings, that's where it's going to come from. Now, Wells Fargo is giving a Q1 preview for Tesla's earnings. Okay. Wells Fargo expects Tesla's Q1 EPS at 34 cents per share, below the 42 cents consensus, citing weak deliveries at 337,000 units and low operating leverage. Auto gross margin excluding credits is seen falling to 12.8% from 13.6%. The firm cut its full year 2025 EPS forecast by 16%, citing an 11% drop in deliveries versus 7% prior. Demand for the refreshed Model Y appears soft, with inventory reportedly building. There's also no update on the low-cost Model 2, and Cybertruck demand is fading. See, you don't see inventory building for the Model Y. That's the craziest statement I've heard in a long time. Look at the inventory levels for the Model Y. The Model Y is this greenish, weird yellow looking color. I mean, you were at a high of like 18,000 units in February, just 2 months ago, almost 3 months ago now. Well, that is way down. You only have 1,200 units in inventory. That's lower than the Model S, the Model X, the Cybertruck, and the Model 3. And it's just been at these low levels since, I mean, really, you came down here in like late March, okay? And that's when Tesla was selling all of their old inventory of the Model Y. Now they're selling new Model Ys. It does not look like there is any kind of inventory issue whatsoever. I don't know where Wells Fargo gets that from. It looks like Model Y demand is very strong. I would really argue against what they say here. Cybertruck demand could be fading a little bit ahead of the rear-wheel drive deliveries, okay? You have seen some like deals happening with some of the inventory vehicles, but nothing that is super dramatic, I would say, overall. And yeah, Tesla can't essentially delayed the Model 2, so that makes sense. I mean, I can agree with that as long as that Reuters headline was actually true, and we won't know that until tomorrow. Now it says, while pricing for Model 3 and Y and S and X rose slightly, aggressive financing acts as a stealth discount, failing to boost demand. Analysts expect Tesla to pivot towards speculative projects like the Cybercab and Optimus, though experts remain skeptical. Okay, that's big. Because I think if we did get an actual delay of the Model 2, we're going to get really good news somewhere else on the, Cybercab and Robotaxi or on Optimus, although Wall Street doesn't really care about Optimus at this point. And again, it has really nothing to do with the numbers or the slide deck that comes out at 4 p.m. that is going to move Tesla. It really comes down to the earnings call. And last earnings call, Tesla answered 8 retail questions, okay? And they answered 3 institutional questions besides just like analysts, right? Just 3 questions that were asked on their website. So number 1, retail. This is the biggest, most upvoted question that was asked. Number 1, when will FSD unsupervised be available for personal use on personally owned cars? Good question. Number 2, is Tesla still on track for releasing more affordable models this year, or will you be focused on simplified versions to enhance affordability similar to the rear-wheel drive Cybertruck? That's going to be a huge question following the sell-off today, following the speculation that the Model 2 is essentially like canceled. Number 3, how is Tesla positioning itself to flexibly adapt to global economic risks in the form of tariffs and political bias, etc. Number 4, does Tesla still have a battery supply constraint noted on Q4 earnings call? And how does this change with tariffs? Anything that has to do with tariffs is kind of a big question for Tesla or really for any other company. Number 5, did Tesla experience any meaningful changes in order flow rates in Q1 related to all the rumors of brand damage? That is also a big question. Is there brand damage with Tesla? We don't know. People have speculated a ton. But until you get Tesla that actually admits that or confirms that, you can't really say there's all of this brand damage. In Europe, it looks like there was a little bit, at least slower deliveries. That could be due to the transition to the new Model Y. Again, we won't know that for another couple of months at least. China demand was really good in Q1. We don't really know what US demand looks like. So brand damage, we don't know. Okay, that's the bottom line. Number 6, robotaxis still on track for this year. I think that's an obvious one. Tesla's going to say yes. Number 7, regarding the Tesla Optimus pilot line, could you confirm if it is currently operational? If so, what is the current production rate of Optimus bots per week? Additionally, how might the recent tariffs impact the scalability of this production line moving forward? Now, that's obviously a big question for us in terms of Optimus. I mean, you can even make an argument like Trump's whole agenda here really plays into AI and humanoid robots very well. If you want to bring manufacturing to the US and you can't even fill the manufacturing jobs we have today that need filled, you're going to need humanoid robots for those jobs. There's 7 million job openings. There is millions of humanoid robots that will be in demand, and Tesla getting ahead of that, being at the forefront of that, is going to be a huge benefit to Tesla stock. It's going to be massive long-term. Institutions don't care about that because it's so far out right now, but we obviously care about that because we're long-term investors in Tesla. Now, number 8, what is the plan to achieve the White House stated goal of doubling deliveries in 2 years based on specific market segments and regional factory contributions? Now, I don't know if they're going to answer that question. We will see. Doesn't seem too important to me, but that's kind of longer term guidance. I don't know if Tesla's again going to answer that or give too much clarity on that. Now, from institutional investors, number 1, what are the highest risk items on the critical path to robotaxi launch and scaling? Number 2, can you please provide an update on the unbox method and how that is progressing? Number 3, does Tesla see robotaxi as a winner-take-most market? And as you approach the Austin launch, how do you expect to compare against Waymo's offering, especially regarding pricing, geofencing, and regulatory flexibility? Now, I think Tesla's going to explain how they're going to launch in multiple cities this year and many cities next year. So unlike Waymo, that's very slow, that has to map cities and areas, Tesla's going to be able to launch simultaneously, essentially, in many different cities, especially going next year after kind of the Texas launch goes well. I think Tesla's probably going to tell us that, cities want robotaxis, but they want to make sure that it goes well in Austin first. That's like the guinea pig, if you will. And if it goes well, then you're going to have deals with other cities coming next year. That could be huge. Like, instead of just expecting two cities this year, if we get 5, and then next year Tesla gives us guidance for 20, I think that would be a massive catalyst for Tesla's earnings coming tomorrow. And I would not rule that out as a possibility whatsoever. Now, again, given the selling that you're seeing today, given the fear, the pre-earnings kind of panic, if you will, you actually have 1.52 million shares today that are being covered on. So hedge funds and institutions, they're taking this opportunity as Tesla stock is down a lot, as we expected it would be, to actually cover on short positions. That's a good sign that they don't want to be, exposed to the upside, right? They want to get out of their shorts. And, that makes sense given the stock is down 40+% just within this last quarter. Now, Tesla's short interest of free float sitting at 2.75%. You have $18.5 billion sold short in Tesla, totaling about 77 million shares that are sold short. So if we get good news and a lot of the bad news that we've seen in the last quarter kind of, gets put to rest, brand damage, what deliveries are going to look like this year, robotaxi concerns, hell, even maybe the Model 2 is still on track to launch here in the next month and a half. Okay, there's a lot of possible outcomes, but you could start to see how you're so negative. It's not going to take a lot of good news for things to be good. Like, you've seen this with other companies before. A lot of solar companies have went through this recently, like Enphase and First Solar, where, the expectations just got so bad. Like, they were expecting 50% drops in, EPS and revenue for some of those solar companies, where you actually got like a 50% drop in earnings or 45% drop in earnings, but it wasn't as bad as feared. It was bad. It was really bad, but it wasn't as bad as feared. And the stocks went higher on earnings, even though, they may have missed and things may have looked ugly. That's kind of where you are here with Tesla, that it's just already so bad that it's not going to take a lot of good to move the stock higher. And that's part of why I'm actually bullish on Tesla's earnings tomorrow. But again, there's a lot of variables. There's a lot of different things going on with tariffs. Again, Trump potentially firing Powell. The economy, are we going into a recession? There's 61% odds from Kalshi, the betting market place, that says we're going into a recession. Like, I mean, people are obviously getting ahead of that at least a little bit today and taking some exposure off the table in markets. Not just in Tesla, but in broader markets. Now, option activity today in Tesla, you had 133 different trades totaling $109 million with a positive order value of 43%. That's very low. I mean, that's pretty abnormal for the day before Tesla earnings. And I think there's going to be quite a bit of option activity coming tomorrow before Tesla reports earnings after the bell. Now, coming tomorrow, let's see, for economic data, you're going to get some bond auctions, the Red Book year over year. Fed Jefferson speaks at 9 o'clock in the morning. Fed Harker speaks at 9:30 in the morning. You get Richmond Fed Manufacturing Index, expecting that to come in worse than last month. Manufacturing shipments, expecting that to improve. And Fed Services revenues, expecting that to get a little bit worse. That data comes out at 10 o'clock in the morning. Then you have a speech from Fed Kashgari at 2 p.m. And Fed Kugler speaks at 6 p.m. Okay, so there is some data coming out tomorrow, but not much. The bigger data comes out on Thursday. Thursday, you're going to get your durable goods orders, Chicago Fed National Activity Index, initial jobless claims, continuing jobless claims, existing home sales month over month, and for the month of March, Kansas Fed Composite Index, Manufacturing Index, Fed Kashgari, and a couple of other Fed speakers. So Thursday is your big day as far as data is concerned, and obviously tomorrow with Tesla earnings, that's a big catalyst for markets. But you also have other earnings like Capital One that's going to be very important tomorrow and after hours. How is the consumer doing? Right? What does Tesla say about the consumer? What does Capital One say about the consumer? What does Chipotle say about the consumer? Wednesday and after hours. Okay, these are important questions. And even American Airlines, right? How's travel? Southwest, how's travel doing? Okay, Intel, Alphabet. There's quite a few companies that are important that report earnings this week besides just Tesla. Now, I will say the big companies for this earnings season is Apple and Amazon because of their exposure to the markets that are going to be tariffed or that are already being tariffed, like China. What do they say about recession odds? What do they say about inflation? What do they say about margins from these tariffs and how they could be affected? You know, Tesla, Intel, Alphabet, the companies reporting this week, not as much, of a extreme tariff hit, right? Nothing like Amazon or Apple. So just be a little cautious. That this week is not the end-all be-all, that next week's going to be even more important from a broader, macro perspective. Now, again, anything can change on a day-by-day, minute-by-minute, or hour-by-hour basis when you have one guy that's really controlling the whole narrative on trade, around the economy, and now looking to fire Powell. So any good or bad news can definitely shake things up a bit. Now, I will tell you, I think there's a lot of pressure on Trump, especially today. Bonds skyrocketed. TLT was down 1%. Like, this is the exact opposite to what Trump actually wanted, right? It's kind of like a big FU. The bond vigilantes are saying, yep, nope, we're going to send bond yields higher. Okay, I think it has to do with other countries kind of attacking our bond market. They would never admit that, but I think that's what they're doing. And it's going to force Trump's hand. It's going to force Trump to stop the trade war. It will. And it will likely force the Fed to jump in. And this is why, in a nutshell, Trump keeps attacking Powell for not cutting rates. He thinks for whatever reason, if Powell cuts rates, that like TLT is going to go up. Treasury yields are going to fall. That's not the case. Like, that would probably cause very large destruction in the bond market if Powell were to cut rates, because at that point, you're not even credible to your words anymore. The Fed would lose so much credibility. Like, why would you buy a 20-year bond when inflation could be crazy high by then if the Fed loses credibility. Like, it would destroy the bond market. And we would create a much larger disaster. So if things, don't go to hell, you can credit that to Powell by not caving to Trump's demands. I don't even think Trump knows what he's doing at this point. Let's just be honest. Like, I'm just some guy over here that has, studied markets for better part of the last decade. And even I can tell you, if Powell were to be fired or cave to Trump prematurely, the bond market would implode. You would have a crisis and or maybe depression, okay? Like, why would you own treasuries if the Fed can be that influenced by someone in the White House, especially if Trump was fired? Like, that's just blow up the whole treasury market. Like that's it. So point is, there's a lot of different variables that are out there in play right now. Now, I do think if things go well for Tesla earnings, as I expect that they will, and hopefully nothing else goes too crazy in the meantime in the broader markets, I think Tesla could get back into the 300s, right? Give us some good positive news, some positive surprises. You could be back in the 300s. Now, if things are bad, you're dropping down to about the 180s. Okay, 180s are where you really seen a lot of demand in prior periods for Tesla. I doubt we would fall below the 180s. If we did, you're kind of in no man's land. Anywhere down to like 140 could be possible, down to 100 could be possible. I think 180 would be a big level though, and that's where you'd see a lot of demand that actually comes in. So let me know what you guys think about all of this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.